Last week, DeepSeek, a Chinese AI company, released a new reasoning model that turned out to be comparable to OpenAI, Google, Meta, and Anthropic. The big difference? DeepSeek claims they built their model at a fraction of the cost big tech firms have spent. A U.S. export ban on Nvidia's most advanced AI chips was supposed to slow down China's AI ambitions. Instead, they just caught up, fast. And that's bad news for Silicon Valley and the U.S. stock market. Nvidia, Microsoft, and other AI-driven stocks plunged, wiping out billions in market value almost overnight. Investors thought the U.S. had an insurmountable lead in AI. Now, that assumption is crumbling. This isn't just about artificial intelligence. This is about who controls the future of global markets, trade, and economic power. Make sure to like, share, and subscribe to Economy Explorer so you never miss a major shift that could reshape the economy. DeepSeek AI's disruption. Why the market reacted. For years, the United States stood unchallenged in artificial intelligence development, pouring billions of dollars into research, infrastructure, and computational power to maintain its dominance. Companies like OpenAI, Google, and Meta led the charge, with models such as GPT-4, Gemini, and Llama setting the global standard for cutting-edge AI capabilities. The assumption was that these firms had built an insurmountable lead, one that would ensure American superiority in AI for years to come. But that assumption just collapsed. In a matter of months, DeepSeek, a Chinese AI company, disrupted the entire industry by developing a model that delivers performance on par with OpenAI's most advanced technology, but at a fraction of the cost. While OpenAI and its backers have collectively spent over $10 billion training and refining their AI systems, DeepSeek achieved a similar level of sophistication with just $6 million. This isn't just an impressive technical feat, it's a wake-up call for the global AI race. What makes DeepSeek's breakthrough even more significant is its open-source approach. Unlike OpenAI, which has moved towards secrecy, monetization, and restrictive licensing, DeepSeek is taking a radically different path by making its AI completely free and accessible to the world. This shift doesn't just undercut the business models of U.S. tech giants, it changes the entire economic landscape of artificial intelligence. Startups, corporations, and even governments that once depended on expensive closed-source AI solutions now have an alternative that is not only cost-effective, but also highly adaptable and scalable. That means billions of dollars that would have flowed into U.S. firms could now be redirected toward open-source AI initiatives, possibly centered around China's growing AI ecosystem. This development poses a direct challenge to the economic and technological dominance that Silicon Valley has enjoyed for decades. If businesses worldwide begin shifting toward free open-source AI models, the revenue streams that fuel U.S. tech companies, drive stock market growth, and attract investor confidence could weaken. The repercussions extend far beyond the AI sector. Global markets, investment strategies, and economic policies will all have to adjust to this sudden change in competitive dynamics. This isn't just about one company outperforming another, it's about the potential realignment of technological power on a global scale. The U.S. is now faced with a stark reality. AI leadership is no longer guaranteed, and if American firms fail to adapt quickly, they risk losing their stronghold on one of the most transformative industries of the 21st century. The stock market's reaction. A warning for investors? Investors were not ready for this. AI has been the main driver of the stock market rally in 2024, pushing tech stocks to record highs and fueling the belief that Silicon Valley would remain untouchable in the AI arms race. But DeepSeek's breakthrough changed the game overnight. Nvidia, the company at the center of the AI boom, saw its stock plummet within hours, erasing billions in market cap as investors scrambled to reassess its future dominance. Microsoft, Google, and Meta, three of the biggest players betting on AI, also took heavy losses, with over $620 billion wiped from the total market value of major AI-driven stocks. The Nasdaq, which has been heavily reliant on AI-fueled optimism, suffered one of its worst single-day declines in months, as traders began to question whether AI would remain a uniquely American advantage. The problem isn't just that China caught up, it's that they did it faster and cheaper than anyone thought possible. DeepSeek's success signals that AI development is no longer an exclusive, capital-intensive game controlled by a handful of U.S. firms. If a Chinese company can replicate OpenAI's technology for a fraction of the cost, then Silicon Valley's AI valuations might be severely inflated. Investors who once believed that U.S. tech companies had a multi-year lead in AI innovation are now forced to reconsider. With AI now emerging as a truly global competition, the landscape of technology investments, market confidence, and corporate dominance is shifting faster than anyone expected. The bigger picture. Will this trigger a U.S.-China AI trade war? Washington is already panicking. The U.S. government has spent the last 2 years tightening export controls on AI chips, blocking Nvidia and other semiconductor firms from selling their most advanced hardware to China. The strategy was meant to slow China's AI progress, ensuring that the most powerful computing capabilities remained in U.S. hands. But DeepSeek's breakthrough has completely undermined that effort, proving that China has found a way to develop cutting-edge AI models without access to Nvidia's top-tier chips. If China can keep pace with U.S. advancements despite these restrictions, what else have policymakers miscalculated? This realization has sent shockwaves through Washington, where lawmakers are now scrambling to reassess their approach to the global AI race. Now the pressure is mounting for the U.S. to take even stronger action. Some officials are pushing for expanded trade restrictions, arguing that current export controls are not strict enough to prevent China from catching up. Others are calling for tighter regulations on AI research collaborations, fearing that even indirect partnerships with Chinese firms could accelerate their advancements. There is also growing momentum for a ban on U.S. investments in Chinese AI startups, which could further cut off funding channels that help China scale its AI ambitions. But here's the problem. AI is a global industry, and information cannot be contained by borders. While the U.S. is trying to maintain control, China is taking the opposite approach, making DeepSeek's AI fully open source and free to the world. If businesses and developers worldwide can access and improve upon Chinese AI models without restriction, the U.S. risks losing its grip on the technology it has worked so hard to dominate. American AI firms are stuck behind paywalls, licensing fees, and closed ecosystems, while China is giving the world a powerful, cost-effective alternative. If this trend continues, it could shift billions in AI investment away from Silicon Valley to Beijing, fundamentally altering the balance of power in the global tech economy. How this could reshape the global economy. AI is more than just a tech race. It's an economic war that could determine the next global superpower. For decades, the U.S. has held a firm grip on technological innovation, exporting everything from software to semiconductors and setting the global standard for digital advancements. This dominance hasn't just shaped industries, it has cemented the U.S. dollar's position as the world's reserve currency, with American companies like Apple, Microsoft, and Google leading global markets. But now, that dominance is under threat. If China's AI models become the go-to tools for businesses and governments worldwide, the balance of power could shift, undermining U.S. influence over the global economy. AI isn't just a tool, it's an infrastructure for future economic growth, and the country that controls it could control everything from financial markets to military strategy. This uncertainty is already rattling investors who are looking for safer alternatives to hedge against potential AI-driven market instability. Gold, Bitcoin, and commodities are seeing increased demand as traders reposition themselves in case U.S. tech loses its edge. But here's the real risk. If institutional investors begin doubting U.S. supremacy in AI, it could trigger a capital exodus from American markets. Tech stocks, many of which have seen record-breaking valuations fueled by AI optimism, could start seeing major pullbacks, with investors shifting their focus toward emerging markets, alternative assets, or even Chinese AI firms. If AI innovation starts shifting away from Silicon Valley, it raises a troubling question about the U.S. stock market as a whole. Are tech stocks, the backbone of Wall Street, dangerously overvalued? And if so, how will that impact the broader economy? What's next? How investors should prepare. This isn't just another tech development. It's a wake-up call for global investors, policymakers, and financial markets. In the short term, expect to see higher volatility in AI-driven stocks as Wall Street tries to assess whether DeepSeek's breakthrough is an isolated event or the beginning of a much larger trend. Nvidia, Microsoft, and other AI giants are already under immense pressure, and upcoming earnings reports will be critical in determining how much faith investors still have in their long-term dominance. If U.S. firms fail to show a significant technological edge over DeepSeek and future Chinese competitors, it could trigger a broader reevaluation of AI stock valuations. But in the long term, this could reshape global capital flows. Investors will need to rethink where the real opportunities in AI lie. If China can continue developing high-performance AI at a fraction of the cost, American firms will struggle to justify their sky-high valuations, massive research budgets, and closed-source models. This shift could also impact U.S. economic policy, with Washington potentially increasing AI funding, introducing new regulations on foreign AI investments, or even pushing for government-backed AI initiatives to prevent the U.S. from losing its lead. Whether or not the U.S. retains its AI edge, one thing is clear: the global AI market will never look the same again. The decisions made in the coming months by investors, policymakers, and tech leaders will determine whether AI remains an American stronghold or becomes a globally contested battlefield. The next big AI shift is coming. This isn't the end of the AI race. It's just the beginning of a massive shift. For the past 2 years, investors have poured billions into software-driven AI models, betting that companies like OpenAI, Google, and Microsoft would shape the future. But now, the race is evolving. AI is moving beyond text-based models and chatbot assistants into something far more powerful: hardware AI. The next wave of disruption isn't just about language models. It's about robotics, automation, and AI-driven infrastructure that will redefine industries, supply chains, and even national economies. The companies that master AI in the physical world will shape the next economic cycle. Nations that invest in AI-powered manufacturing, logistics, defense, and medical technology will control the industries of the future. The question now is no longer just about who has the best algorithms. It's about who can turn AI into real-world power. And China just proved that it can close the gap in AI development despite sanctions, despite restrictions, and despite the dominance of Silicon Valley. The U.S. still holds massive advantages in computing power, investment capital, and AI infrastructure. But for how much longer? This isn't just a competition between companies. It's a race between superpowers. If the U.S. loses its lead, it won't just reshape markets, it will reshape the world. The future of AI isn't written yet, but one thing is clear: whoever controls AI controls the future. If you found this video insightful, make sure to like, share, and subscribe to Economy Explorer. Watch one of the suggested videos on the screen now for more in-depth analysis, and thank you for being a part of our channel.